Thank you for coming. Talking today about the Woodlark Gold Project. It's a 1.6 million ounce project. It's ready to go. It's fully permitted. It's on a small island off the coast of PNG. It's one of the best places in the world to go looking for gold and developing gold. Some of the world's best gold mines are in PNG and some of the world's best exploration targets are in PNG. Just run through a quick overview of the project before we get into the details.
Project is located in neighbouring Papua New Guinea, which hosts some of the world's largest gold deposits. The Woodlark Gold Project is located on Woodlark Island, which is around 600 kilometres east of Port Moresby, and is accessible via both air and sea with established landing strips and port facilities on the island. Geopacific has a strong relationship with the local community. With the majority of the future labour force living locally, the development of the project will provide positive social, educational and health benefits while maintaining competitive operational costs. The project currently has 3 defined gold deposits for a combined 1 million ounces in gold reserves and 1.6 million ounces in gold resources. High-grade gold mineralisation sits near the surface, as seen in red, driving significant upfront operating cash flows. Immediate resource growth potential also exists beyond the blue sections of the current pits. The project is underpinned by a robust mining and production profile. An initial 13-year operation will produce over 100,000 ounces of gold per annum in the first 5 years and over 1 million ounces over the current project life. However, the project holds even further growth potential, as Woodlark is a highly prospective, multi-million ounce goldfield with significant exploration upside from its 600 square kilometre exploration licence. The definitive feasibility study was completed in November 2018 by industry leaders, and key technical aspects have been validated by independent technical experts. The study confirms a high-margin, technically robust development opportunity that generates significant upfront cash flow and a rapid project payback period. Mining at Woodlark will be across 3 defined deposits, targeting the highest grade gold first. The standout feature for Woodlark is the low waste required to be moved to mine the ore, particularly in the earlier years. Low waste allows for very competitive all-in sustaining costs, which is a key driver in high margins, generating upfront cash flow. Woodlark benefits from other low-cost drivers, such as a flat topography, easy access to all project areas, outcropping mineralisation, and a supportive local community. Geopacific has an experienced team with a strong track record in developing projects in remote locations. Woodlark is shovel-ready for gold production, with environmental and mining permits in place.
So where are we now? We've got 1 million ounces in reserve. We're ready to go. We're fully permitted, shovel-ready, as the Canadians like to tell us. We've got a proven management team. We've built multiple mines in multiple countries and in multiple commodities, so we've operated in these parts of the world before. Extremely attractive gold field. It's easily a 3 to 5 million ounce field, which for this part of the world still makes it very, very small. And at the moment we have an extremely attractive valuation compared to our peers. There's no doubt we're taking a little bit of a penalty for being in PNG, but hopefully by the end of this presentation we'll be able to get everybody on the page that where we are in PNG makes it totally possible place to operate. Market cap at the moment, circa 100 million, four in the bank. We've got a very, very strong board. Ian Klein, ex-CEO of the Bank of South Pacific, based in Port Moresby, huge amount of experience in country. Colin Gilligan, a 40-year experience mining engineer. Recently had Ian Murray, ex-Gold Road, doesn't need a lot of introduction, join the board, and Matt Smith, one of the best CFOs you'll come across. One of the big differentiating points for the company as compared to a lot of other Aussie juniors is the very strong register. I can make 12 phone calls and speak to about 80% of my register. We are very strongly sophisticated on the register, not a lot of retail at this point. Tembo Capital, our major shareholder, big UK fund. Delphi, a large German fund. Franklin Templeton, one of the world's largest funds based out of the States. Spheria Asset Management, New South Wales-based fund, and other institutions make up the top 80% of the register. So a huge amount of hitting power here. They know what the job is to be done. Some of them are new to the register, so they know exactly what we've got to do to move forward and build this project. As you can see there, share price, since we released our independent technical experts report, which took off from the DFS to move us into the banking project profile, you'll see that our market cap has improved significantly from where it was. Tembo Capital, our brokers, have a current price on us of 8 cents. So we've still got a long way to go, and it's easily a 2 or 3 bagger from here before we actually get into build. PNG, why are we there? It's one of the best places in the world to go looking for gold. Some of the world's largest gold mines are there, operating very successfully. Lihir, 66 million ounce, huge project. Simberi has been part of the turnaround story for Zimbabwe. They're operating in very tough conditions up there, but a fantastic team on the ground doing a great job. We're sitting out in the middle. There'd be a lot of gold mines closer to us, but we're an island and we're offshore. We're sitting in the middle of a plate, so we don't get any tectonic activity. Very easy place to work. We've got one group of people, so we don't have interaction between various tribes. Everybody speaks English, and it's quite a large Christian community there. There's no police on the island. Security is not one of our issues at all. It's a very easy hour, 20-minute flight, pretty flight actually from Port Moresby out to site, and very strongly stability in the government. We haven't seen a lot of changes to the mining law in the last 40 years, in fact nearly none. Very supportive of the mining industry. They realise that the mining industry is one of the major support mechanisms for the country, so we get a lot of help from them, and they're very, very easy to deal with. One of the issues people think of PNG is topography. As you can see, we're pretty flat, doesn't get much flatter than that. Very, very easy place to operate. We're near the coast, we've got a good port in place. This is one of the easiest places I've worked in many, many years. Production, we're going to knock out 1 million ounces over the mine life, about 104,000 ounces for the first few years. The standout for this project as compared to most that you will look at is that very low strip ratio. 4-to-1 life of mine, sub 3-to-1, nearly 2-to-1 for the first few years. What does that mean? We don't have to move half the planet to get to our ore. Most Australian operations would be in the 7-to-8s life of mine. Year 1, year 2 would probably be in the 15s, we're sub 3. At $3 a tonne, that difference goes straight to the bottom line. So it makes the project very, very robust when compared to operating with others. Payback period at current gold price is 1.4 years, which is pretty special. MPV, 601 million at the current price with an IRR 57%. So very, very robust project. It was very robust at our feasibility study prices, which was 1650 Oz. At current prices, very, very robust. If you have a look at the numbers there, all-in sustaining cost is really the standout, sub 900 for the first few years, and again that's Australian. So our margin currently well over $1,300 an ounce. It doesn't get much better than that. I've been doing this for 36 years, I've never seen it anywhere near as good. 2.4 million tonne per annum plant, very soft free milling ore, extremely easy process route, good recoveries, good throughputs. And have a look again at that strip ratio. That really is the standout from a lot of projects. Exploration upside, huge. This is the Coolamadaw pit. It's only 120 metres deep. It's the deepest of our 2 pits. Most people that you'd be looking at with 1 million ounces in reserve would be down 250, 300 metres. We're still shallow. We're open at depth, we're open along strike, and a huge amount of infill potential here to extend, join this up. This will become one large pit in the fullness of time, and it will go a lot deeper. We've got a lot of inferred mineralisation surrounding the pit. And if you have a look at the long section of that, you can see the current pit outline near surface. We need a little bit more drilling to push that down and move that extra 600,000 ounces that we've got in resource into the project. Large-scale exploration is very fantastic, really. It doesn't get much better. Within a few kilometres of where the process plant will be, we've got multiple targets. There's targets where they intersect on northeast, northwest structures. Where that comes together, you get mineralisation continuously. You'll see the repetition that you get between zones. Up here with deposit here, deposit here, deposit here, and deposit here. Nothing happening in between. There's a thin layer of coral in this area, so no exploration has happened in that area. Fully expect another 1 or 2 targets to fall within that zone there, and this is only within a few kilometres of the mine. We've got 600 square kilometres of exploration opportunity on the island. In fact, we have the entire island, so nobody else can come in. Resources and reserves, 1 million ounce resource, 1 million ounce reserve, I should say, 1.6 resource. As I say, easily a 3 to 5 million ounce field. So exploration upside in this area is huge. And at that level, still very, very small by any comparison in PNG. Where are we at the moment? We're in project financing. Our independent technical experts report has been completed. The banks are going through that now. We're getting questions back from the banks and we're expecting term sheets in the near future. It's a 200 million Aussie dollar build. We would expect 120 of that to be debt financed. We're seeing a lot of interest, particularly when you've got negative bonds happening in Europe. The sort of interest rates that people get for financing mines is attracting a lot of interest. So we've got a good collection of banks and non-bank lenders looking at what's going on. The equity side, as we say, we have that superb register. It really does set us apart from a lot. It's going to make doing the equity side considerably easier than some, even though it's in very tough conditions. Looking at where we stand, metrics compared to some of our peers, we're at the bottom end. We probably put that down to PNG more than anything else. People are starting to realise now that we can operate here. We're fully permitted. We're working with the mines department. As I say, they've been excellent to work with. The project has moved along extremely well and we're now ready to go. And you're seeing that market kick up. We're up 300% over the last few months. So it's been quite a good ride to date, but still massively undervalued in comparison to our peers. Going back to why the project is so robust, it's that all-waste ratio drives this strongly. You can see the cost savings available to us. That goes straight into the bank and or back to shareholders where other people pay to mining contractors. Over the first few years, those cost savings are really quite incredible. The margins that we're looking at now on our DFS, which is 1650, we had a very good margin. Now we're at 61% margin. I've never seen this in the industry before, and again, driven by that low waste ratio, outcropping mineralisation from surface. We don't have much in the way of pre-strip to get into it, and good milling. Where do we look at enterprise value now? Where we were, very, very robust when we did the project. Now looks like a poor cousin to where we are currently. Margins have never been better. And again, net cash flows, nearly $1 billion net cash flow now, up from 424, which was also very good. MPVs don't get much better than that, and IRRs certainly don't get much better than that. So we're sitting there with an extremely robust project at the moment. Upfront cash flow, 84 million on our DFS, currently 140. Doesn't get much better than that for free cash flow per annum, especially in the first few years. So where are we overall? We've got a licence to operate. We're working with the community. They are very on side. In fact, as far as they're concerned, we're not moving fast enough. The fact that everybody speaks English means that they will make up the most of our workforce. We will have a small contingent of expats, probably about 30 on site. So not flying a lot of people around. We have to take the local people along with us. That's vitally important operating in this part of the world, and it's built into our plans to train, educate and move the people forward as they really want this project to go ahead. They have nothing at the moment and they're looking forward to being part of the ride. So finally, 1.6 million ounce project. Very attractive valuation to our peers at the moment, so it's a good time to have a look at this as an investment opportunity. We are shovel ready, we're fully permitted, we're ready to go, we're in financing at the moment. We've got a team who's done this a lot before, so we know what we're doing. And the margins have never been better. It's not often you'll see these sorts of margins in a gold project. Thank you very much.